know you've done this before with I know you've done this before with us, and we appreciate you jumping on. There's been a lot of calls like recently about annuities, and I think they're super important.
Yeah.
But even like for me, and I've sold a couple of them. JJ Schultz sold a couple of them. But for like newer agents, it does, it's intimidating, right? So I want it to be like literally a annuity training for dummies almost because that's how like none of us know anything about them, right? So like how do we
Yeah.
find it? When do we find it? When do we ask the question? I'm just gonna let you rip it out, dude, even if it's 30 minutes, whatever it is, bro. Thank you.
Cool. Yeah, for sure. Well, that's exactly what I'm going to go over. So we'll basically go through like the basics of A to Z of annuities. So, Jared, I would agree with you that new agents, the reason why they don't sell annuities is because simply they just don't ask. They're kind of intimidated of the process. With annuities, guys, they're actually very simple. Like, I'll be the first one to say that I know way more about annuities than I know about IULs. Like, IULs are way more confusing with the taxes and the gains and tax free. Like, it's a way different process. So, with annuities, the first thing I want you guys to write down and do, especially if a lot of you guys are newer agents, is when we get off this call, I want you to text your upline and say, hey, send me contracting for Athene, NLG annuities, and F&G annuities. Those are really the three ones we need. Athene is the one that 90% plus of the business is going to go through. So get those three. Once you start that process, they'll make you do trainings. They'll make you, if you're in California, you'll have to do a 4 hour continuing ed credit. But get that done because the worst thing is when you find a client and you don't have the carriers, because these carriers take a week or two to get in just because they're a little bit more advanced. The worst thing is when you have a deal and you can't write the deal because you don't have the carrier. So that's step one. A lot of the those three carriers that you get with, you'll have to do product training on them anyway. So that'll also give you a really good knowledge base of their products, how they work, etc. So that's kind of housekeeping out of the way. The basics of an annuity, guys. Our clientele that we sell annuities to. The average case size is 50 to probably about 150, 200 grand. Of course, if we find someone with $500,000, $1 million, $2 million, I had a $4 million one that we're working on a couple weeks ago. We can sell those clients, but the basis of our clients are the 50 to 150 grand. There are final expense, there are mortgage protection, there are IUL clients or leads that have 401ks, IRAs, TSPs if they're teachers, 403Bs if they're government employees, or they have old retirements from other jobs, or maybe they just have money in the bank or in CDs or something like that. All that we're doing with an annuity is we're moving the funds from one account, whether that's their bank, their 401k, their IRA, stock account, whatever. All we're doing is we're transferring the funds from that point to a fixed index annuity. And with the fixed index annuity, kind of the basics for you guys to write down. And of course, once you start doing these, you'll get better. But if you just know these four basics, then you'll be golden. This is like the four easiest things to know. One is going to be growth. So these funds, they move into the fixed index annuity, they go into the stock market in index funds. So you guys know all the index funds, S&P 500, NASDAQ, BNP Paribas. And the best part about it is with the carriers, they already have preset index strategies that blend all the best ones. So you never have to choose which index they're going into. So they go into the stock market in the index funds. Now, depending on how old the client is, depending on the age, depending on the product, the growth is going to vary a little bit. What I've been seeing, especially with my favorite product, which is Athene Performance Elite Plus 10, what I've been seeing is the historical returns on that product are anywhere from the high eights to the mid nines. Now, I always tell clients I like to under promise, over deliver. I always tell them, hey, with these accounts, we can, really count on a solid 7, 8, maybe 9% if it's a really good run in the market. So that's number one, the growth. Number two is going to be the safety. So the same exact principle of an IUL, meaning when we lose or when the market goes down, we stay at zero. We do not go negative. So just like an IUL. So this type of account, yes, we get pretty solid growth, but the main thing about this account is we have zero risk to market loss. And the way I always explain this to people, I mean, sure, do we have younger people that get inheritances and they don't want to lose their money and they want to put it in 100%? We sell 30-year-olds, 40-year-olds all day. The main people are the 50, 60, 70-year-olds that are either getting close to retirement or they're in retirement. What I always tell these people is, when you're young in your 20s, 30s, 40s, you can ride the wave of the market, right? The market's been absolutely crushing it. On Friday, it absolutely crashed, like went way down. When you're young, you don't really care because the money's going to be in there for 10, 20, 30 years. The stock market historically always goes up. Sure, it corrects, but it always goes up long term. So if you're young, you don't really care. What I tell older clients in their 50s, 60s, 70s is you guys are no longer in that category. You guys are in your preservation years. Meaning, if we lose 10, 20, 30% one year, we don't have the time like when we were young for that account to recover. And the reality is, if these people, if they have a couple hundred grand and they lose 50, 60, 70 grand overnight, they're in trouble. That's like the money they're counting on to live forever and last them forever. So the no risk in the market, that's a huge, huge point of FIAs. And it's one of the coolest things where we can actually say we guarantee you can't lose any money in the market, where a financial advisor, a stockbroker, anything like that can legally not say that because, of course, they don't know what's going to happen in the market. They can't guarantee that. So that's point number two. Point number three is right now, depending on what product you sell, we're seeing bonuses anywhere from 20% all the way up to 34%. Now, this is called a premium bonus. And so they're very high right now, probably because of the market, inflation, and stuff like that. But what's really cool is you can say, hey, Jared, you're 100,000 that you're moving over into the FIA in your state, which when you guys do an illustration, which will be the second call we do, you'll see exactly what bonus they get in their state. So I can say, hey, Mr. Jared, you're 100 grand. We're actually able to get you a 22% bonus. So instead of moving 100 grand, you're going to get an extra 22,000 in bonus. So your account will start growing at 122 grand, which is a really cool thing to say. So they're getting free money off the rip. That's called a bonus. Point number four is liquidity. So with these accounts, just like your bank account, right? If I take no withdrawals from my bank account and I just let it keep on growing, I just let my stock account keep on growing, it's going to grow the most because I'm not taking any principal out of the account, right? I'm not touching it. With the annuity, it's the same concept. They want that money in the market growing. Once you start taking money out, it's not going to grow as fast, right? Simple math. With the annuities, depending on which one you write, most of them will allow you 5 to 10% liquidity per year. So, what I always tell people, for example, let's use the Jared example of 100 grand. Let's say Jared just retired. I would say, hey, with this account, it's meant to grow and keep your money safe. So, with this product, the Performance Elite Plus 10, we can take out 10% per year. As long as we can stay within those constraints, we're not going to pay any penalties or anything like that. If we go over the 10%, we start getting hit with some penalties. We don't like penalties. We don't even want to deal with them. Now, if we have to, it's a couple of percentage points. It's not going to hurt you. It's not going to kill you, but we try to avoid them. Now, what I tell people is as long as we can stay within that, then fantastic. But if you tell me, hey, I may need more money to buy a vacation home, to buy a new car, to go on that trip I wanted to go on, to fix the AC unit, anything like that, then Jared, what I would suggest is instead of moving all your money into the annuity, maybe we just start with 50% or 75% and you keep some funds on the sidelines to be able to use for purchases like that. So those are the four main things. Now, the good thing is we don't really have to explain any of those in that type of detail when we're new and we're just trying to set up the appointment. So those are kind of the principles. The next thing is your job is to find the money. So when I was brand new, I'll give you guys a true real life story. My biggest year in the field, I issued 520 grand. Okay. In that first year, I did not ask for the money or find the annuity opportunities for my first 9 months. In November, or sorry, in October, I started just saying, you know what? I'm going to try to find any type of funds people have. I'm going to try to find the money. I don't know anything about annuities, but I'm going to basically alley-oop it to my manager, the SRS team, someone that knows what they're doing, and they will split it with me and they'll do everything and make the sale. So I was like, all right, I'm just going to ask people. So this is probably the most important thing for you guys to start asking and for you guys to write down. So when we go through a life insurance presentation, we go through the intro, we go through who we are, we send them our licensing, we go through medical questions, and then the last part is we go through some financial questions, right? Before we kind of gather the quotes and option close them on three options. Once we go through the health questions, if you guys are familiar with like our financial inventory sheet, it's kind of midway towards the bottom. And the question you need to ask them, we refer to it as the golden question, and it's to find the money. So the way that that sounds would be I go through the medical questions and I say, hey, Jared, do you have anything that acts like life insurance that will pay out to your family when you die? I'm going to repeat that. Hey, Jared, do you have anything that acts like life insurance when you die that'll go to your family? Any 401ks, any IRAs, any money in the bank, any inheritance, anything, stock accounts, anything like that that'll go to the family. And for you guys that are all selling life insurance, that question is amazing because it serves you no matter what way they say it. If they say, no, I don't have anything, then I say, oh, wow, okay, didn't realize that. So this life insurance is even more important because if you don't have anything to pass on to your family and you pass away without life insurance, they're going to be screwed. Obviously, that's why we're talking. So it's like a mini option close, and that's going to help you close the life insurance sale even better. If they say, yes, I do, then my question is, okay, great. Which one of those accounts do you have? 401k, IRA, money in the bank, stocks. And let's say they say money in the bank. Great. Let's say they say 401k or IRA. My next question is, oh, okay, great. About how much is in there? Or if they say bank account, okay, great. How much is in there? I'm just trying to gauge roughly what they have. So let's say they say 100 grand in their 401k. So, okay, great. All I'm going to do at that point is either write it down on my piece of paper, write it in my phone, take mental note. Okay, Jared has a 401k with 100 grand into it. That's the end of the conversation. I get back on script with life insurance. I go through the option close and I try to sell my life insurance appointment. Now, after the life insurance appointment, whether I close them or I don't, now I'm going to come back to the money and all I'm going to try to do is set an appointment. That's all I'm going to try to do. So the way that verbiage sounds, whether I sell them or not, is, hey, Jared, one last thing before we get off the phone. Our company, we specialize in protecting people's retirements and protecting their money. So I know you said you have an old 401k with about 100 grand in there. Do you have any plans, Jared, as you head into retirement to grow that money while protecting it from market losses? And most people say no, or they say, what do you mean by that? From there, I say, hey, Jared, if there was a way where I could show you where we could protect that 401k. So when the market goes down, we never lose money, but we could grow it at a good rate and earn you a premium bonus. Is that something that you'd be interested in seeing? And most people say yes or yes, what is it? And then all I say from there is what I'm going to do, Jared, is I'm going to make a proposal for you, or I'm going to draw an illustration for you that kind of shows the numbers and what it would do. And then what I can do is we'll need about 10 minutes either tomorrow or Thursday. We'll hop on Zoom and I'll show you it. What day works best for you, tomorrow or Thursday? Okay, great. Do you want to do morning or evening? Okay, great. I can do 5 or 7. So it's just like booking an appointment from life insurance. That is the extent of your work. So I know everyone's muted, but by a show of hands, does everyone think that that's pretty simple and they can do it? Awesome. Super, super simple. So the key points you're going to gather throughout that conversation is, of course, you already have their name, you already have their state, you already have their age. The two other things we need for the annuity is what type of money it is. So in this case, the 401k. If it was a bank account, it would be a bank account. If it was a Roth IRA, it would be a Roth. We just need to know what type of source the funds are coming from. Then the last part is how much money. In this case, it's 100 grand. So that is literally as easy as it is. And then if I'm Jared, I'm going to pick up the phone and I'm going to text or call him and say, hey, Hayden, I have this client that has 100K in a 401k. Can you meet with her tomorrow? She wants to meet at about 7 p.m. And then I say, yeah, sure. Or, hey, let's move it to 7:30 or 6 or whatever it is. Draw the illustration and present it. So that is as simple as it is. And I learned from one of my annuity mentor, amazing guy. He would write like, 5 to 10 million dollars a year while selling life insurance, 5 to 10 million annuities. And what he always told me is we don't sell annuities, we find annuities, meaning the people that are looking for this, like I said, they're not our millionaires. They're not the people with these big fancy financial advisors. They are our life insurance clients that have never thought about it. They've never had a financial advisor. They were just told to put their money in 401k and IRA, put it in a CD because it's safe. They know no better option. And so our job is just to see who's interested and then get them on the next appointment. Because, guys, I've been working in annuities now for almost 8 years. I have never seen the premium bonuses and the growth that I've seen the last like 6 months, 9 months from the annuities. And so the point is, when you show these folks the illustration, they're freaking sold because they see great growth. They see they can't lose their money. They see these huge premium bonuses. A lot of these folks that have their money in the bank or in like CDs, the dang premium bonus of 22, 24, 26 plus percent is going to be more growth that they're going to get in their CD or their savings account for the next 2, 3, 4, 5 years, just the bonus. So your job is just, we used to call it book a meeting from a meeting. Book the annuity appointment for the next one, for the next day or two, and then get on with that. Jared, do you want to stop
Yeah.
there and ask any questions?
Yeah, for sure. Just so people know it, like I mean, I have like 2 pages of notes and it's very cut and dry. So everyone, if this is all recorded, I'm gonna kind of type out like all the steps and the script and all the steps, so it's very easy for everyone to actually start doing this. Because that's one thing is like you can have these calls, but no one will implement it, and then does nothing, right? So, if everyone actually does it, like for example, I've sold $100,000 annuity, right? And the commission was like 5,700, I think. And just so everyone knows in here, when you sell an annuity, it's 100% non-chargebackable. It's literally added money to what you do. And then when I sold it, it was new in the business, and it honestly like saved me really. Like I probably would have been fine, but like, dude, an extra 5 grand, 6 grand when you're new in the business just for finding money, I mean, it makes sense to do it. You know what I mean?
Dude, there's those you guys that were Ignite, you guys probably heard it, but there was a newer guy who found a $6 million annuity.
Crazy.
I think at either the start of this year or the end of last year, and he made like 350 bands as a new agent, which obviously is an insane extreme case. But here's the reason why you guys should sell annuities. One, you guys are already doing the work of the life insurance. You just ask a couple more questions and just dig a little bit more into it, and it's free money. Two is the average annuity commission is about $8,500 across the company as of last year. So the way that I would think about it is, hey, if I can ask the question every single time, and let's say I'm running 20 to 30 appointments a week, right? So I'm running 100 to 150 appointments a month. If I ask the question in every single appointment, and let's say I get 10 presentations a month, out of 10 presentations where you get them on the screen, they see the illustration, you guys are going to sell one, two, three, or four just by kind of walking into it, even if you're not a annuity master yet. The important thing about if you guys can just sell one annuity a month, we now have a six-figure income that, like Jared said, is basically non-charge backable. So that's why it's important for you, and that's why it's important when you're building a team to get your new agents to really start asking that. The other thing too, if you say, "Hey, I don't really care about annuities, I just want to sell more life insurance," asking that question, like I said, it makes you in a stronger position. You know more about their situation, where you can now sell them more life insurance. So that's kind of the basics of them. I think, Jared, that's kind of a good place
Yeah.
to start for everyone. And
Mhm.
then at the end of this week or next week, maybe what we do is everyone tries to get contracted, submits everything as soon as possible, and then we'll hop on, we'll do a demo of basically what an illustration is. And like a guy was asking me yesterday in the office, he's like, I've never done this before. Like, how do I make an illustration? I'm like, open your computer and let me show you. I'm like, you hit like six buttons and you type in
Yeah.
eight instead of seven on the illustrated rate, and then you click print. And like you have your illustration. So I promise you guys, it's way easier than IULs. These things are very, very simple.
Dude, it's honestly like an America e-app. Even writing the actual annuity is so easy. It's honestly so easy.
It
It's
is.
crazy.
It is. When I started asking the question at the end of my Hall of Fame year, Jared, I didn't know anything about them yet, but I stumbled into almost 300 grand by the end of the year, which made me an extra almost 20K of commissions. But the first lady, I still remember like it was yesterday. She was a retired teacher. I go into it, I find that she has it was a small amount, 30 grand. At the end, I come back for it and I say, "Hey, do you have any plans to grow it and keep it safe, in your retirement?" Word for word, she goes, "No, but I've been looking for something that does." And it was like the easiest sale ever. So I'm like, "All right, sick." It was only 30 grand, so I made like
Yeah.
1,600 bucks. But then the next one was a mortgage protection client, went through it, and she goes, "Oh yeah, I actually do have an annuity." When I asked her the golden question, "I have an annuity." I'm like, "Oh, okay, cool." And I'm like, "What company is it with?" And she's like, "I think it's the Athen or Athene or Athene." And I'm like, "Oh, cool. That's like my favorite company to write annuities with." So we get done with everything. I'm like, "Hey, send me a statement of your annuity and how long do you think you've had it for?" And she's like, "I don't know, maybe 9, 10, 11, 12 years. I don't know." And I'm like, "All right, find it and let me know." True story. It was like 260 or 270 grand. She sends me the statement from Athene, and she was like 27 or 28 days. It was less than a month away from coming up on her 10 years, where
Nice.
the annuity is now out of the withdrawal charge surrender period. All I did is we waited for the 28 days to expire. I wrote a new app. We called Athene. They approved it, of course, right away. And the money was already with Athene. So they transferred it into the new one within freaking 30 minutes. And I got paid the next day, which was like a 13 or 14 grand commission, which freaking
Crazy.
I was like, holy crap. So it just goes to show that if you just ask, you'll find the right people that want to do them. And it's not even like a sale at that point. It's very simple.
Yeah. Yeah, that's awesome, Hayden. Yeah, I don't want to we won't go any further. I don't want to overcomplicate, but we'll for sure do it next week. Does anyone have like one or two questions for Hayden before we close it out?
I have a question. Correct me if I'm wrong as well, Hayden, but I always hear people say don't mention annuities, right? Always say it's a FHA or FIA.
FIA. Yeah.
Because people it's like a trigger word for them because I mean they've heard wrong things about annuities. So once you, like you said, when you set up the appointment, don't mention an annuity because they most likely won't show up.
Yeah, that's a great question and comment. So, especially older people, the FIAs are relatively new products over the last couple decades. So our clients that are, 50, 60, 70s, when they hear annuity, they think of variable annuity, right? Variable annuities, you can lose money. You can make more money, but you can lose money. So for some people, their parents, their grandparents, they had them, they lost money, and it's like a trigger thing. So you're exactly right. And then if there is any hesitation, I make sure I get in front of it and I say, "Hey, Jared, by the way, a lot of people they've heard of variable annuities. Those are the ones where you can lose money. So if the market goes down, you go down too. I'm not licensed to sell those. I'm only licensed to sell the fixed index ones. And those are the newer ones that you can't lose money in the market. So I just wanted to get ahead of that. A lot of people get confused, but I would never sell those. That's what we do. And then people are like, oh, okay, cool. I like that. Fixed index annuity.
Great question. The one more.
Yeah, I got a question. What's up, Jared? Thanks for making this happen. What's up, Hayden?
What's up, Mark?
Just a quick question for you, Hayden. Why wouldn't someone want to put their money into an annuity? Like, what is it? Like, it all sounds great. So what's kind of like the negatives that will come up?
Yeah. So I would say one is the liquidity piece, where if they think they need to access 20, 30, 40, 50%, it's not a good fit. And that's when we kind of down close and say, hey, Jared, instead of doing 100 grand, if you think you're going to need money to take out over the next couple of years, let's dial it back to 40, 50, 60, 70 grand. So that's number one. Number two would be if they've been with a financial advisor for a long time, sometimes those are kind of tough cookies to crack because they're so in their ways with their financial advisor. And then I would say three, and I'm always super transparent with people. Like for me, I'm 30. I wouldn't get a fixed index annuity because I know that in the stock market and different investments, I can make more money over time. This type of product is for someone that gets an inheritance that really doesn't have a lot of like knowledge when it comes to investing, or it's for someone that's coming up on retirement or is in retirement and their goal is no longer maximum growth and riding the roller coaster of what if the market goes negative. Their goal is I want a steady growth. I want to make sure it's safe. And I want to make sure that when I do retire, I actually have money that I can pull as income and my money's never going to run out. Because that's a lot of retirees' biggest fear is what if my money runs out before I run out? And we can, with the annuities, we can help them have a peace of mind of knowing your money is going to be there when you retire because we're not messing with the market losses when it goes negative.
Oh, that was money. I appreciate that. Thank you so much.
Yeah.
All right, great
I have a
question.
quick question, Hayden.
Yeah.
Sorry, Jared. Um, so let's say someone opened an annuity and they put in 100 grand. You said there's a bonus of 20%. Is that right?
Depends on the product. So like right now, 24, 26 is common with the 10 years. And with the 15 years, Athene just sent out an email that it's freaking 34% right now.
Okay. And there's also a payout for the first 2 years. Each year is 10%. Am I getting
So
that? Is that
de
different or that's the same?
different depending on the product. For the Performance Elite Plus, it's going to be 10% per year that they can take out. And the cool thing with that product is if they don't use it 1 year, it rolls to the next. It doesn't go past 20%, but if they don't use it, let's say in year two, in year three, they can take out 20%.
Okay. And that's on top of the first initial bonus of 20%. Is that right?
Yeah, correct. Yep.
Okay. Perfect. Thank you.
Yeah.
Dude, hey, Mo's working on a fatty right now,
Yeah.
huh?
Yeah.
Let's go, baby. All
Got
right.
something cooking.
Let's go, dude. All right, Hayden, I appreciate you. We're gonna have like a part two for this for next week for sure. We'll get it scheduled and then we'll put like a boot camp video together on running annuities.
Money.
I appreciate you, Hayden, dude. We'll see you later on the leaders call later on.
Yes.
Cool.
Yes.
Awesome,
Perfect.
brother.
Have a good day, guys.
Thank you, guys. See you guys.
Bye.